We are going to be covering sustainability assurance in this video, maybe in a bit more depth than is needed, but the idea is that we cover all aspects of this topic so that we can tackle any sort of question that can come up in the AAA exam. Now, in terms of the contents, we'll be looking at the sustainability report, what goes in that report, because that becomes our subject matter that we're going to assure. We look at what sustainability assurance basically covers, the particular challenging factors from an auditor's point of view when they're giving this assurance, the matters to consider when they accept such engagements, what happens at the planning stage, how the procedures can be designed, and the contents of an assurance report on sustainability information. Now, to start off with, let's first understand what we mean by the term sustainability report. So if I say a company is publishing or making its sustainability information public, the idea is that they could be reporting on their environmental, social, and governance impact. So environmental issues like their energy consumption, their gas emissions, how much water they've used, how they manage the waste of the production process. Social factors relate to how they treat people. So whether they have a diverse workforce, this could be cultural diversity or gender diversity, whether they carry out trainings for their employees, what are their measures regarding health and safety, what they do for the community or the local community, how they deal with human rights, etc. Governance factors basically cover how the company is managed. So, for example, the composition of the board, this could be the balance between executive and non-executive. It could be about diversity in that board, how the executive pay is measured or how it is given, what element of executive pay is linked to sustainability goals, their ethical policies, whether they comply with laws, regulations, whether they have strict anti-corruption measures, etc. So ESG is a term that you might come across. So if a company could be reporting on all three of the factors or some of them, obviously based on the business or the nature of their business. Now, in an assurance engagement, and we know this because we're at the AAA level, we know that there's a subject matter that needs to be matched to the suitable criteria. Evidence needs to be gathered, and then an opinion or conclusion is given. So the subject matter is this sustainability report that we are going to be assuring. Now, the report could be created or sustainability information could be reported based on different reporting criteria or the reporting framework. So they could be using best practice frameworks like the Global Reporting Initiative or European Sustainability Reporting Standards. You have IFRS S1, S2 as well. That is again an example of your reporting criteria. Your reporting criteria could also be internally developed. So maybe we're in a country where there is no regulation for sustainability reporting, and I don't want to use GRI ASRS, then I've created my own applicable criteria. So once again, remember, the subject matter is created based on a suitable criteria. These are two components or elements of an assurance engagement. We need to be very clear on how this information could be published because this could then affect my answer in the exam as well. This information could be a part of my annual report, or it could be a standalone or separate sustainability report as well. So remember, if we talk about the word annual report, we have your financial statements, we have external auditor's report, and we have lots of other information in this report. So if it's a part of the annual report, then this sustainability report becomes other information. And then in external audit, the auditors will be checking this for consistency with financial statements as well. However, if this is being published as a separate report, then external auditors do not have any duty towards this. In either case, even if it's being published in the annual report or as a separate one, you could be asked to give assurance on this information as a separate engagement. So I'm going to repeat this, be very clear. You could be coming across such an engagement or such information in two aspects. If you're an external auditor and you're just doing your normal audit of financial statements and you find out that sustainability information is published in the annual report, then this information becomes other information and I will have to check it as a part of my external audit as well. On the other hand, if it is a separate standalone sustainability report, then as a part of external audit, I have no responsibilities towards this at all. On the other hand, this is again a discussion regarding my responsibilities as a part of external audit. If we just forget about external audit entirely and we just talk about assurance on this information as a separate engagement, it doesn't matter where it is being published. So now maybe another firm, say EY, PwC, etc., has been hired or appointed to give assurance on this sustainability information that has been reported. So this would be a separate engagement that we're covering in this particular video. So it could be either engagement. Another concept that is going to be very new to you is the concept of double materiality in sustainability reporting. So I haven't started assurance yet. I'm still talking about this from a company's perspective, the company or the management which is creating this sustainability report. So this is a very EU standards based concept, but it's becoming increasingly important. It is referred to in the sustainability assurance standards as well. If I say what is sustainability reporting what is double materiality in sustainability reporting, this simply means that the management or the company, they will decide which information to report in their sustainability information report based on two factors: the financial materiality and impact materiality. Financial materiality covers how the ESG factors affect the company's financial performance, their risk, or their long-term value creation. So, for example, if we talk about a car manufacturer, they need to disclose how the emerging or new carbon regulations could affect their production costs. So in terms of financial materiality, this is the impact on the company or their financial performance that I am going to be considering. Impact materiality is the other way around, how the company's own activities affect people and the planet. So if you talk about a fast fashion retailer, so who make like average quality clothes which are, discarded quite quickly, they could be reporting on their practices regarding contribution to water pollution or labor rights issue in certain regions. So they are now reporting not just about how it impacts their own financial position and performance, but what their impact or their activities impact is on the society or ESG factors as well. So financial materiality is how this information could affect my production, revenues, insurance, my risks, etc. And impact materiality is how my company's activities are affecting the people and the environment. So what are the uses of water or fuel, again, which is not good for the environment as far as my company is concerned. So in sustainability reporting, we're not talking about assurance. They could be using the concept of double materiality, which includes financial and impact materiality. Now, this is where your assurance topic is coming in. So we have discussed, just to stop here for a second, we've discussed what a report is. A sustainability report could include information based on ESG factors, environmental, social, and governance. That ESG information would have been recorded based on a suitable criteria or sustainability reporting framework, which could be some global best practices or which would be internally developed as well. And the information that is reported in my sustainability report could be or might be including the concept of double materiality. So explaining the financial impact as well as the impact materiality how our company's activities are affecting the environment and people around us. We're now becoming the assurance practitioner. So we have been asked to give assurance on a company's sustainability report. Very similar to what you know already, the level of assurance could be limited or it could be reasonable. In a limited assurance engagement, we are going to be doing lesser work, basically focusing on management discussions, inquiry, and analytical procedures. And the opinion that we give is called a negative statement, and it is referred to as a conclusion. So again, in a limited assurance engagement, instead of giving an opinion, we really give a conclusion. In a reasonable assurance engagement, there's a higher level of confidence. Therefore, we are going to be carrying out detailed substantive testing. We are going to be looking at systems as well, systems used to prepare that sustainability information. And the opinion that we give is going to be a positive opinion. So again, very similar to what you've done in AA, a negative conclusion is given in a review engagement where limited assurance is being obtained, and an opinion is given in a reasonable assurance engagement where more work is being done so that a higher level of assurance can be given. Now, in terms of challenges in reporting sustainability information that auditors need to be aware of, your information could include qualitative factors and information about the future. So beyond the numbers, which are relatively easier to verify, there could be qualitative information. So things like descriptions of my community program. So how the program that I've designed to help my local community, and more forward-looking information, for example, my future climate targets. So if a company is in their sustainability report, if they're talking about or they're disclosing what their community program is about or what their targets are about the future, auditors will have to obtain evidence over this, and obviously that'll be slightly more difficult because there's no financial data that needs to be verified. Auditors will need professional judgment to gather evidence about this. So similar to accounting estimates in financial statements where there's judgment required, there's more uncertainty in forward-looking information like targets. There's more judgment in evaluating qualitative notes to the accounts, or over here, notes information on sustainability reports. And therefore, more judgment is required as a part of my assurance engagement. Another thing that is an important factor to consider is at the moment, there is no one reporting criteria that is being used to create that sustainability report. So when there are no uniform standards for creating that sustainability report, auditors will need to assess whether the chosen framework or the chosen key performance measures are really defined clearly, and are they consistent with any stated criteria. So for example, if a company is reporting water usage, they might only be including the water usage of their factory. Another company, if they're also reporting water usage, they might be reporting the water usage of their factory and their head office as well. Because there's no consistency in the reporting, then again, the auditors will have trouble in evaluating what the criteria says and which water usage elements have to be recorded. So second discussion point is there's a lack of standardization. Very simply put, the systems that are there to capture that sustainability information are not very mature at the moment. So remember, whatever you're putting in your report about past information, about future targets, all of this would have been recorded as a part of data through systems. So again, there could be gaps or inconsistencies, there could be errors, and therefore it's very important that auditors evaluate how that data was gathered and reported. So the process that was used to maybe record the water usage or employee injury logs, etc. Or how was the electricity consumption recorded. So the process or the systems used for data collection and reporting might not be reliable or could be weak. This is a newer term, so you need to be comfortable with this. Boundary means the example that I gave earlier. Which measures or which information are you reporting in your water usage? Just the factory and the head office, your own companies, as well as the suppliers and customers, etc. Or again, the boundary and the scope means which information is going to be included as a part of my report. So there are certain reporting frameworks which say that when I ask you to report on your environmental impact, it's not just about your own impact, you should be reporting on your supplier's impact as well, which is considerably more difficult to gather information about, and therefore this will become problematic for the auditors. So auditors will have to be alert about the boundary and the scope of information that needs to be reported. They'll have to look at what the criteria says, and they'll have to make sure that all relevant information has been recorded accordingly. So what we've done up till now has been quite simple. We know that the client creates the sustainability report. They would have used some criteria to decide which of the ESG factors have to be reported. The firm would be giving an assurance on that sustainability information. It could be limited assurance or reasonable. In both cases, there are a couple of challenges that you have to be aware of. Things like difficulty in confirming qualitative disclosures, etc. And we're now officially starting the assurance engagement. Again, this information, you can pause each slide to go through this. I will give you a quick overview. In addition to your usual considerations, like your fee, your resources, your time, etc., there are specific factors that you need to consider and clarify at the acceptance stage. So in terms of what we call preconditions, it has to be clear what the objective and scope of the engagement is. So what is the purpose and which sustainability information is going to be assured? So you need to know what the subject matter is. You need to know the reporting boundary. Is it just your own operations, or is it going to be your suppliers, customers, etc. as well? You need to know what the reporting criteria is. Is it some globally accepted standard, or have they developed their own sustainability reporting standards? And you'll have to clarify whether the level of assurance is limited or reasonable. If there's a lack of clarity on any of these preconditions, you should not be accepting this engagement. Another factor that you have to consider, and this is easier, is about your own firm's competence and skills. Now, this is very interesting. You need to have two types of skills. You should know how to give assurance, and you should know or have information about sustainability issues. So, like external audit, you need to know assurance techniques like inspection, inquiry, etc. But you also need to know your accounting standards. Exactly the same way, you need to have your assurance techniques, and you need to know how information regarding sustainability is reported. If there's expertise that is missing, you should either be training your staff and including experts or specialists. If you can't do either, you should be declining the engagement. Similar to your other engagements, there are quite a few ethical aspects you should be looking at. If this is for an existing audit client, so you could be looking at self-review, because remember, this information will become other information in the annual report as well, if it's included there. So be alert to information given in the scenario. It could lead to self-review threat. If they're offering an amount of money as fee which is too high, then in that case, my objectivity might be compromised because I want that extra money. All the fundamental principles apply. You'll have to be honest, you'll have to be unbiased, make sure you have the required competence, keep information confidential, and do not do anything that brings discredit to your profession. And if there's any indication that the client's management lacks integrity or the reporting has not been done fairly And if you find this at the acceptance stage, then you should not be accepting this engagement. So because we're doing this as a part of the AAA syllabus, you'll see it is pretty much the same stuff that we've done for other engagements. The only difference is obviously it's more linked to sustainability information, which is my subject matter here. At the planning stage, you need to be gathering information about the client and how they've prepared the sustainability report. You need to know about the business, the industry, the topics that they're reporting on, the system that was used to report that information, their policies, procedures, all of that needs to be understood. Again, it is very important that you understand how that information was reported. So how did you gather the amount of water that was used? How did you measure the carbon emissions? So that system used to prepare that information, sustainability information, needs to be understood. You should be again carrying out a risk assessment. So find out which areas of sustainability information are at a higher risk of fraud or error. You should be concerned that there could be errors in calculations. There could be data collection gaps. So when they were measuring carbon emissions, they conveniently left out one of the biggest factories. There could be management bias. They're trying to hide the negative impacts. The fact that they might only be reporting on the positive parts is called greenwashing. So you know how you have manipulation in financial statements? You have the term greenwashing, which means I'm only reporting on the positive ESG factors. In a reasonable assurance engagement, I am going to be evaluating internal controls. In a limited assurance engagement, I might not be looking at the internal controls. So the client would have set their own materiality. That's a separate concept when they were creating that report. And of course, auditors need to know that. So auditors or assurance providers, need to be comfortable with the concept of double materiality because they need to understand how the client had incorporated that in their sustainability report. From our perspective, we also have to decide materiality similar to external audit. So we're going to be looking at two factors, qualitative and quantitative. So we are going to focus on matters or disclosures that could affect the judgments of the users, even if they're not numerically quite big. So for example, if a minor data reporting error could call into question the company's commitment towards human rights or attract a lot of negative media attention, I would consider it material, even if it's not a big number in terms of materiality. So if they've given a disclosure on how they treat their labor workforce without any numbers in it, that for me would be a qualitative disclosure, which is material by nature. And then, of course, you have quantitative materiality or metrics as well. So auditors would use numerical cutoffs to identify which figures would need detailed testing. So I could say any carbon emissions over 2% of reported emissions are going to be material for me. So they've reported 10 million tons. If the actual one is actually 11 million, I'm still okay because I let that go. But if the actual emissions are say 15 million, then that for me is going to be material and could affect my assurance conclusion. So do not confuse this with double materiality. Double materiality is used in creating the sustainability report that we are assuring. This is my own materiality that I will have to initially or preliminary materiality that is set at the planning stage to see whether the errors are going to be material or immaterial at the end of the audit. We are going to be developing the overall audit strategy, the assurance strategy. So decide on the nature, timing, extent of audit procedures. You would have understood the client's internal control system. You need to decide whether you're going to be relying on it. You'll have to see whether you will be needing experts. You're going to allocate work to the team members, and you are going to be very seriously looking at the need of an expert, like I mentioned earlier. So at the planning stage, you should be aware of your limitations as an assurance team so that you can engage experts when they're needed. So you might not need them for your governance factors or maybe social factors, but you might need an expert for the environmental factors. So once I know what the problematic areas are in the sustainability report, and I've set my initial materiality in terms of which disclosures or which matters are material by nature and what's my quantitative metrics as well, we can now come to designing procedures to gather evidence. I'm not going to be looking at this in detail. You could stop at each slide and read through this, but my procedures are very similar to external audit. You could be interviewing management and those who prepared that sustainability report. You would be talking about the assumptions they've used, etc. When you carry out analytical procedures, if there are significant differences in the reported information versus what you think should have been reported, that would need to be investigated. You could be inspecting source documents. So for electricity consumption, it would be the utility bills that is the source document. You would be checking calculations on those source documents. In some cases, you might be carrying out observations of physical inspection. So you could be, for example, visiting a certain factory or a facility to physically check how a fuel tank gauge is, recording the fuel that was consumed. So how do you actually measure the consumption? How is it reported, etc.? Or maybe you could observe how waste is handled and disposed of. So you could be carrying out external confirmations if there are any third parties involved. Again, if you are reporting on your suppliers' emissions as well, then you could be circularizing them or sending them confirmations. And if you're using an expert similar to audit, you'll have to make sure that the expert is competent and you're going to be reviewing their work as well. So there's no concept of blind trust on the expert's word. Once the evidence has been gathered, again, the auditor or assurance practitioner will confirm it is sufficient and appropriate. For each material area, you should have gathered proper evidence, which is good quality and enough in terms of its quantity. Be alert, we've done this already, but be alert that your disclosures related to policies or other narratives or descriptions and forward-looking information is going to be inherently problematic. So there's going to be a lot of judgment that would have been needed. So make sure this was worked on by senior people and proper evidence was gathered. Throughout the assurance process, you should be exercising professional skepticism. So you should be alert to management bias. You should be alert to the fact that they might be greenwashing, which means they might be omitting the negative impacts of the ESG factors. The assurance report would look something like this. There's a standard, which is ISSA 5000. We've been using pretty much that standard for the entire syllabus. And this is the format that is given by the standard. So you have the title, addressee, the assurance which is given. So again, for reasonable assurance, it's called an opinion. For limited, it's called a conclusion. You have your basis for opinion or conclusion. If you are highlighting a correctly given disclosure in the sustainability report, you could be adding an emphasis of matter paragraph. Other information is slightly important. I don't think this will come up in AAA, but in the sustainability report, the subject matter might not be the entire report. Now, this is slightly higher, but you should know this. So, for example, the sustainability report includes ESG factors, and you have been recruited or appointed, to give assurance only on environmental and social factors. So in this example, the governance factors will be other information. If this is a part of my annual report, remember, if this is a part of my annual report, this includes the financial statements, then this financial statements will also become other information. So in a sustainability assurance engagement, whatever you're assuring is your subject matter. In that booklet, whatever else is published that was not given assurance, that we did not obtain assurance on, will become other information. So again, I don't think this is important for your syllabus, but you should know what other information is, and we would be reviewing that for consistency. We talk about responsibilities of sustainability information, managements and those charged with governance responsibility. We'll talk about any inherent limitations that were there in measuring that sustainability information. We'll talk about the practitioner's responsibilities, any local requirements if they tell you that you have additional responsibilities as an assurance provider, they will be mentioned over here. You'll have the engagement partners or leader's name, signature of the firm and its details, the practitioner's address, and the date of the assurance report. Again, like I said at the start of the video, I think this is slightly more information than is needed, but something you should just know. And finally, just to wrap up, like a short question. Now, your client is a global fast fashion retailer and they have 1,200 stores across the globe. For the year ended, oh, that should be 30th September, apologies. For the year ended 30th September, the company published its annual sustainability report covering 4 KPIs with comparatives. And because of local law, they need to obtain reasonable assurance on this sustainability report. So this is a separate report that has been published. So they have said their carbon emissions have gone down from 55 to 50. So this has gone down. Their water consumption has gone down from 130 to 120. Their workplace incident report, so this was the E and this is the S. The workplace incident report has also gone down. So this company is apparently doing really well. And they did ethics and anti-corruption training, and 98% of the employees created that training. So this is the governance factor in terms of their policies regarding ethics and anti-corruption. And you have been appointed as the assurance provider. You need to design procedures to obtain sufficient appropriate evidence to reach a reasonable conclusion on this or give a reason. I'm not going to be reading through all the procedures, but just to give an idea, let's just cover a couple. These are a bit more detailed than is expected in AAA. But for the carbon emissions, so greenhouse gas emissions are very easily your carbon emissions. So if I put it in a very basic manner, that's the smoke coming out of your production process, right? So a couple of easy procedures. You should test the system that was used to actually record those emissions. Remember, you can't really weigh the smoke, right? So there must be some factors, maybe the amount of fuel used for the volume of production. There must be some calculation method. So I need to test controls. I could be inspecting documents like fuel purchase invoices. I could be recalculating the factors or how the emissions were calculated. I would be making sure that the emissions or the transactions are recorded in the correct accounting period. I could be carrying out trend analysis by maybe matching emissions to production volumes, etc. So a number of procedures can be carried out to confirm the emissions. For water consumption, which if you remember has also gone down, you could be carrying out analytical procedures by comparing the monthly water usage trends against last year. You could be again discussing any unexpected variances with the management. You should be looking at utility bills. You could carry out discussions with the management to ask them how water has been saved, have they done any water saving initiatives, etc. So a couple of factors, because this involves utility bills, there must be a third party. So you could be actually circularizing the water utility provider or that third party as well. Very similar to what we've done for the rest of them. Regarding the workplace incident rate, again, start off by testing the controls over how those incidents were reported and recorded. You could be looking at any accident logs that they have, any investigation reports. You could be obtaining confirmation from the lawyers, or if they have insurance, then maybe the insurance companies, etc. So a couple of procedures to confirm the workplace incident rate. And finally, your training completion. Again, we're starting off with evaluating controls. You could be inspecting documents like the training material that was used. Once an employee completes the training, any certificates that were issued, that could be looked at. So again, the idea is they are saying 98% of the employees completed the training. I need to make sure that percentage is correct. So, like I said at the start as well, the procedures are slightly more detailed than you should be knowing. So don't worry too much about a technical word that has been used. Just ignore that. As long as you can pick up one or two procedures for each key performance indicator, you are good to go. And just to wrap up the video, as a part of your AAA preparation, there are 3 technical articles that you need to be preparing from ACCA's website. And trust me, so we have like a 35-minute video. If you've understood even 20 or 30% of what we've discussed in the video, then these technical articles are properly covered automatically. In any case, please do make sure you review these articles before you go for your exam.